I'm Jim Cramer, and welcome to my world.
You need to get in the game.
Firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere, and I promise
Mad money. You can't afford to miss it. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, just trying to make you a little money. My job is not just to entertain you, but I'm trying to educate you, teach you, and coach you. So call me at 1-800-743-CNBC. On still one more terrific day for stocks. With the Dow up 30 points, S&P gaining 0.3%, NASDAQ rising 0.2%, despite Apple being down. I want to make sure that you aren't sabotaging your own portfolio. This is an incredible, unsung, and unheralded bull market. And it would be a tragedy if you missed out on so many fantastic gains just because of some dumb amateur mistake that could have easily been avoided. So I am going to make sure you think like a winner, not a loser. I want you to think like a pro, not an amateur. And, man, when it comes to boneheaded amateur mistakes, you know what? You can learn so much from this Twitter, specifically from reading some of the dopier entries on my otherwise pretty savvy Twitter feed at Jim Cramer. What an education. So, since I want you to have a superior attitude and superior state of mind, a la stock sage Steven Seagal as Mason Storm and Hard to Kill, not a loser attitude, let me detail some of the most common loser arguments that I'm seeing on Twitter's at Jim Cramer trading post. By far, the most frequent one I see is this the top in such and such a stock? Just like that. Is this the top? Like, is this the top in Caterpillar? Which happens to be a stock I own for my charitable trust, ActionAlertsPlus.com. A top? Please. This kind of defeatist illogic is something that I try to combat here on Mad Money every single day. This is not the time to worry about tops in great stocks. Sure, if you think the fundamentals of a company are deteriorating, that sales are decelerating, that margins are being compressed, that the end markets are getting weaker, that the execution is getting sloppy, the competition's heating up. Well then, yeah, maybe you might have a top on your hands. Sell. But in this market, there aren't too many stocks that fall into this category. Least of all, the very hungry Caterpillar, which is taking no prisoners in its quest for heavy machinery world domination. If, on the other hand, you think the gross margins are good, maybe getting better. If the sales are strong, which happens to be the case with Cat, then you most likely do not have a top on your hands. You have a stock that can churn ever higher, one that might have excellent earnings power in the out years to come. So stop looking for tops in all the wrong places. Stop scaring yourself out of good stocks for absolutely no reason. Now, does that mean that Cat won't go down? Of course not. It very well might. These are stocks we're talking about, not some sure thing like a lock in the 7th at Pimlico. But a temporary decline doesn't make a top. Here's an analogy that may make this whole thing easier to understand. Imagine the hottest stocks as great baseball pitchers gearing up for the season. Roy Halladay, of my beloved Phils, is the best pitcher going today. But that doesn't mean he wins every game. The odds for Caterpillar are exactly the same kind of thing. Cat's going to lose some games, meaning there'll be days when the stock is down because of a variety of forces maybe it has no control over, worldwide forces that are in flux, maybe a bad defense, so to speak, or forces having to do with the mechanics of the market. The Phillies aren't going to bench Halladay just because he might occasionally lose, and you shouldn't sell Cat just because it sometimes does go down. Second self-defeating behavior I see on this Twitter. People will call winning stocks losers. Now, this is the kind of constant catcalling you get about stocks that go higher, even if someone thinks they shouldn't. And that has been the case with Lululemon, a frequently attacked stock on Twitter at Jim Cramer. The typical criticism, this is a loser, overpriced company with a product that's made of fibers, which are getting more expensive, that women have already bought too much of, and you know what? It costs too much. Its future's not as bright as its past. Okay, now, the problem with this kind of argument is that you could have made it when Lulu was at 30, and at 40, or at 50, or at 60, or at 70, or at 80. At no time was that set of criticisms invalid. But obviously, they have not been enough to stop the stock from going higher. It's not that the criticisms were wrong. It's that they didn't matter. These very heard-on-the-street / Wall Street Journal arguments totally misjudge why a stock moves. I want you to think of it like this. Stocks are an asset class. We're going to go all biology on you. Stocks are an asset class. And within that asset class are certain phyla, or orders, or genuses. Well, you know what I mean. Genus. And they're not, they're species of stock. They're not nematodes or Solenorata. Lululemon belongs to a particular family. It's one of the highest growth stocks. Now, there are mutual funds that seek these highest growth companies all the time. And since these funds have been very right for a while, people have been throwing their money at them. And when that money comes in, the fund managers go and they buy more Lululemon. It's that simple. As long as Lulu hits their growth benchmarks, and as long as these funds can model even a pie-in-the-sky earnings estimate in the out years, again here, let's say 2014, and that estimate doesn't carry a price-to-earnings multiple that's more than twice the company's growth rate, these funds are going to keep buying Lululemon. The only way Lulu goes down is if it fails to hit those benchmarks. And then what will happen is you will see a wholesale sell-off. They will sell. They will dump it from whatever level it happens to be trading it right at that moment. The only way to short a stock like Lulu without getting your head taken off is by waiting until that moment comes and the growth stumbles. Until then, you bet against this kind of stock, you're doing so at your own peril. Then there's the mother of all loser questions. The why do you hate AMD so much? This is a company that's at the top of its game argument, with AMD being the perfect metaphor for this kind of inanity. The fact is, I don't hate AMD, it's just a company. But it hasn't made you any money in a generation. It's basically only slightly higher than where it was a couple decades ago. Treasuries outperformed it. Handle it. Again, if you want a sports analogy, that's a terrible record befitting a truly terrible franchise. Perhaps along the lines of the present-day Pittsburgh Pirates, maybe the Detroit Lions, if you want to talk football. You don't want to bet with that kind of team, even if it is under $10 like AMD is. There's a culture, a mentality, and a product profile that just isn't good enough in a business that has to compete against Intel, which, like it or not, does have a fantastic long-term history of being a tough competitor. I guess you could think of them as the Yankees. So, to say AMD is at the top of this game is just nuts. Doesn't mean it can't win some games. The worst teams ever, the worst team ever, the 9-73 Philadelphia 76ers back in '73, they did well win 9 games. Finally, they're the people who demand to know how I can still like some super hot stock like a Netflix or a Chipotle, as if it's some sort of unconscionable act of recklessness. My reply, hey, if you don't feel that way, go sell, go short it, I don't care. You don't need to own everything. But if you ask me, the reckless thing would be to miss these moves. Because, well, you had a chance to retire on these rallies. And believe me, I have seen plenty of people retire on good stocks. The goal is to find a Netflix or an Apple or the next Netflix or the next Apple, not to laugh at or dismiss the people who discovered it and stuck with it. Here's the bottom line. Making money in a bull market like we have, and any market that's the quickest to double in modern history is a bull market, arguably the best bull ever, is something you must strive for. Missing these moves is actually a sin. Being ignorant or arrogant, more interested in catcalling or mindless stock bashing, these are the traits of losers, not winners. And I need you to win, because we aren't tweeting, we're investing. And it's not 140 words. It's real money. Lisa in New Jersey, home state. Lisa!
Yes, I want to wish you a belated birthday. We share the same birthday.
Oh, well, I'll tell you, me and Bob Iger at Disney, that stock 52-week high. He's hitting it out of the park. How can I help?
Okay, my question is on Visa. What is your 3 to 5 year outlook on Visa, being that Visa is at the forefront of global payment technology? And do you think the stock is being held down by its debit fees? And do you see Visa trading like MasterCard in 3 to 5 years?
Lisa, I got to tell you, I know better than to deal with a company that is in the crosshairs of the federal government. So you know what? My 3 to 5 year outlook is deeply controlled by a couple of senators. I don't want any of my stocks having anything to do with a couple of senators because they can do whatever they want. So my answer to Visa is I have no outlook on it other than you can't own it. Because I can't model what a senator from Illinois is going to do to a company. So I try to find companies that a senator of Illinois never heard of. Can I go to Dee in D.C., please? Dee?
Yes.
Dee?
I'm ready. Is this Cramer?
Yes, Cramer. Is this Dee?
Hey, Dee, this is Dee from D.C. Big booyah, presidential booyah.
I'll give you a Washington Nationals. Good luck with Jason Worth booyah. Go ahead.
And my question is about Coinstar. I know that there's a rumor that they're going to have a streaming service similar to Netflix, and do you think that should help the stock recover?
I don't like the company. that blows up and then blows up a second time. Coinstar was up today on that rumor. You know what that is? That's an attractive opportunity to ring the register and get out and get into a better name. I think that rumor's going to live for a couple more days, maybe see 48, 49, and then after that, you got to hit the road. You got to hit the road because when they miss twice, hey, look, they missed once, shame on me. Missed twice, shame on them. All right, hate the haters, not the game. Don't let the naysayers keep you on the sidelines. This is an amazing bull market. Don't be an amateur, be a pro. Bad money. We'll be right back.